Hi, everybody. Scott Riley, the Market Update Desk with Mortgage One, NMLS number 157524. Today is kicking off March Madness. Hopefully, everybody has their brackets in, and we wish you luck with a successful bracket. And hopefully, we get a little bit of University of Michigan win in the tournament. Let's go over what's happening today. Now, yesterday we had the Fed come out with the notes and Q&A from the meeting, and as expected, they did leave the Fed funds rates unchanged. Their statement was very similar to previous statements, adding a line though about the uncertainty in the Middle East activity. There was only one dissenter, kind of as expected, Stephen Miran. He voted for a rate cut, and he was the only one. Now, Powell's press conference was viewed as somewhat hawkish, as he did not pay much attention to the very weak February jobs report showing 92,000 job losses. He indicated that the Fed does not pay attention to just a one-off month report. But when we look back at all of 25, there was almost no net job gains after we got the QCEW. So he appears to be whistling past the graveyard on jobs. He did mention that the unemployment was still low historically and stable, although it did rise to 4.4% on the last report. In fact, it was just 1/100th away from 4.5%. Powell also did make some comments regarding inflation, indicating that they have not made as much progress as what they had hoped this year. And their summary of economic projections, SEP, raised their forecast this year for core PCE to rise from 2.5% to 2.7%. Now, the dot plot chart did still show 1/4 point rate cut priced in for 2026. We're expecting that probably much later in the year, possibly even December. As a whole, the meeting was not friendly to the bond market, but not unexpected either. New home sales. If you read headlines, you're going to be surprised, but that's why we go into some more details on things. It showed that sales of new homes fell almost 18% in January. This is still being delayed due to the shutdown, but was clearly a fairly large miss. The media made a huge deal about it, saying that we never see moves like this, especially from Diane Olick. But it's worth noting that from October to November, there was a positive 17% gain in new home sales. There are some factors that could have impacted these numbers. Bad weather in January. Rates were also a little bit lower then, though. But many of the new home builders, the mega builders, the ones that are publicly traded, it's in their best interest for shareholders to show shareholders a strong closeout of the fourth quarter numbers. So it's possible they did more incentives to push forward sales that would have normally come through in January. So it's that big push may have been a large impact on it. Looking at the 3 months, the average amount of sales were 688,000. And looking at the previous 3 months, it was only 692,000. So as you can see, the data shows not as much difference as what this big headline number is showing, especially when you listen to Diane Olick. She loves to make the negative connotations and splash. Initial jobless claims also came out today. Those were down 8,000 to 205,000. Now, we're watching real close. It seems that these numbers are being brought down partially by gig economy. People are finding they can make more on the gig money than what they can from unemployment. So they're choosing that route versus filing. Now, continuing claims rose by 10,000 to 1.86 million, still down from where we were 5-6 months ago when we were topping about 1.93 million. In the market, we're showing 10-year Treasury currently at 4.2689. Now, that's down from where we spiked earlier at 4.32%, and that is a large concern as we're watching it really close. But we appear at least to be creating a new top resistance, and maybe we're looking at a Morningstar pattern, possibly, which could portend to some better pricing in the 10. Mortgage-backed securities off by 14 basis points this morning again. Brent crude spiked about 112 a barrel. Bitcoin now is back under 70,000. Volatility is the name of what's going on. We're trying to stay on top of it as much as we can, but it does change very rapidly. We did see an attack from Iran on LNG plants in the Middle East for UAE, and that's causing concern because that's a retaliatory strike from Israel to Iran on some of their oil production facilities. So a lot obviously still to play out there, and we're in kind of this big gray area. But the good news is the market is still hot. The buyers are active. So if you wait, you likely will face significantly more competition. Give us a call, 616-293-2189. The Market Update Desk, your original singular market news source for West Michigan.